last September that the PMC bank crisis broke out. I know right now last September seems like it was very, very far away, but the PMC crisis highlighted once again how vulnerable cooperative banks are. Now, cooperative banks and their vulnerability to a clutch of politicians and power brokers has been a huge issue, especially in certain states of the country where there are a lot of such banks, and have seen depositors lose money again and again. That's what happened with the PMC crisis, where depositors are, many of them, still waiting to get back their life savings stuck in that bank. The demand at that point was that the RBI should take control, that cooperative banks should be under the RBI, so that any such scams in the making can be nipped in the bud. There was a move like this announced in the last budget. It would have passed through Parliament possibly, but it got stuck because of COVID. Today, the Cabinet has, through an ordinance, brought about that bill. So essentially, from now on, cooperative banks will be under the RBI. What is the significance of this, and how does it change things in the future? To speak on this, I am joined by senior journalist Tamal Bandyopadhyay. Tamal, great to have you on the show as always. Explain to us first why this ordinance is important and what changes now in the way cooperative banks are governed.
Well, I think it was coming. If you were mentioning about TMC bank crisis, and after that India's finance minister announced setting up a 3-member committee. I think through 2 bureaucrats from the Ministry of Finance and 1 deputy governor to look into the issues. And historically, you will find there is many committees making many recommendations. There are Malagam committee that recommended, and in the recent past, 2015. There was another committee headed by former Deputy Governor Mr. Gandhi. But nothing was happening because always, you were citing the dual control because cooperation is a state subject. Now, when you're dealing with money, would you continue with dual control, which is Reserve Bank of India and the respective state governments? I think finally the government has taken a decisive step by promulgating this ordinance or decided to do this to give the power to Reserve Bank of India. So it's good. Now, what does it mean for the thing? Cooperative bank, the banking industry per se, it's a rotten apple. By and large, most of them are not being run. Governance is a very, very big issue. If you look at this, they're rotting in every way. How the directors are selected, or rather get into the board, how they are run, how they are audited, and how the loans are given. The very purpose of cooperative banks was that to give small loans to non-agricultures, small entities. But have they done so? Not the case. Primarily, this cooperative or most of the cooperatives are being used. Actually, you take a loan from other banks, and to prevent the loan from turning into NPA, you take a loan from cooperative bank. That's how it's been operating. And then they look the other way when the actually loans should be defined as non-performing assets. And then you find the auditors are not doing their job. So people are feeling very insecure, the depositors. I think it would come, it would bring some sort of security with people. Now they will feel secure. But it's a huge job on the plate of Reserve Bank of India. Let me wait for your next question, then we can discuss the other issues.
Yeah. No, so that's the point. What happens now to previous cases like PMC? And now what does RBI start doing? Is it going to be sort of a hunt to check all of these books and make sure there's a massive cleanup operation?
So, say one part is the cleanup, what you need to do, whether it's massive or how you do it, that's a separate story. But there are certain structural issues, like this cooperative, all the banks going by a 1949 rule, they need to have only 1 lakh, I'm repeating, only 1 lakh equity. Now, how can a cooperative bank with thousands of crores of balance sheet in multi-states run with 1 lakh equity, rupees 1 lakh? It needs to change immediately. If you look at the banks,
Yeah.
From the early 90s and till now, the banks need, commercial banks need at least 500 crore to get into banking. And here your cooperative society continue to have 1 lakh equity, needs to be changed. Secondly, how would cooperative bank, why should it do everything? For instance, we have commercial banks which can do everything, but you have small finance banks which cannot do everything. 85% of their loans need to be small granular loans which can qualify for the for priority sector. Similarly, you have payments bank which can't take more than 1 lakh as deposit. But you have these cooperative banks with 1 lakh equity, and it can do everything and anything what it wants. So yes, on the one side of the story, you need to clean up. You need to
Yeah.
clean up the frauds.
So,
You need to get into the right kind of directors and right kind of employment. Even the employments are, connected employment, and keep the politician away from running these banks. That's the cleanup operation.
right. No,
But
no. So
equally
a
important.
lot of that, yeah. A lot of that
Yeah.
hopefully will stop. A lot of that hopefully will stop with, politicians determining who's on the board of these banks and then deciding to give loans to who they see fit, who decide to default on it and then, throw their hands up. But one
Yes.
important question for why cooperative banks have been a big draw is in a lot of cases they offer higher deposit rates which customers found lucrative. Will some points like these now be tweaked that they are under, now that they will be under the RBI?
No, I don't think, because it's a market driven rate. How can Reserve Bank of India say that you don't give higher deposit rates? It depends on your business model. For instance, small finance banks, they are offering much higher deposit rates, at least 2 percentage point higher than the main street banks. But is RBI telling them no, you don't give them? Certainly not. But if you are well run, if you are well governed, and if you can manage your assets, how this small finance bank can afford to give higher deposit rates, because their earnings on their assets also, the granular assets also, much higher than the typical banks earn. So their so-called NIM, net interest margin, they have high, so they because they charge higher to their borrowers, they can give higher rates to their depositors also. So it's a market driven rate. I don't think RBI can do anything on that. But what RBI can do is keep the politicians at bay. They should be run like any other commercial entity, which is not happening. But another point is this: uh, if you see this, Reserve Bank of India also needs to, basically, I would not call it reorient itself, but it needs to prepare itself for the job in hand. Because very recently, the NHB was stripped of its regulation. It has come to Reserve Bank of India. National Housing Bank, all the mortgage loan norms, etc. Now the regulations are with Reserve Bank of India, and there is a demand that supervision also should come with RBI. Now you have cooperative banks also coming to Reserve Bank of India. Then there are commercial
Yes.
banks and there are NBFCs, and we have been seeing a problem in different pockets: cooperative banks, NBFCs, as well as the commercial banks. So I think it's a big
Yes.
task for Reserve Bank of India, because you are getting RBI you are making RBI as a full service central bank, which he
Yeah,
has
but
all
the
along
good
been.
thing is, that the yeah, but
Yeah,
the buck stops there. At least you know where the buck stops, and that's going to
yeah.
be a matter of cheer for depositors in cooperative banks. Who are watching this today. I want to thank you, Tamal, for joining us on the show and explaining everything so clearly, like you always do.